Hello, good afternoon. Welcome to another ES Futures trading stream. The reason why I'm doing this now is rather than an update, I guess rather than calling, I guess it's called pre-market update, my part. I should call it market update here. It is to highlight the relevance, the importance of your homework, right? The preparation that we all, each one of us, must do in advance to, it's easy to close the day or before starting a new day. It is really important. And I'll show you what. It doesn't have to be elaborated, but when you do your homework, you start to see some things, right? Because most of the times when we are trading here, we are so focused on price, right? And we may lose perspective. What's happening here, for example, in the monthly? Oh, let me call the homework I did. It's really short, right? It's not that fancy. Yeah, they did this too. I did this at midnight. Did this? Yeah, I started with this usually with the monthly, right? What we have here, the lag of excess, or something that at the time looks it looks so far down here. This is a go no go level here. This is the first thing that pops here, right? Two things, right? This go no go level when the market came back down and left a non-excess low here. We now have a non-excess high here, and this makes makes this a range in the monthly time frame, right? A range in the same way as you have in the weekly. We have a range in the monthly time frame that extends from right? No excess on the highs, no excess at the lows. Right? And markets kind of like around the same of that. And I stayed that here. The market has no excess in the bigger time frame, 3-month range. 57.25 is a go no go level, but it's far from where we are. Where prices are right now. It's really far. Now the next thing is the weekly. In the weekly is this chart, this one here. Right? This one. This is a range. We have a range here. High of the range, low of the range. Now this high moves higher. This one is now this high. I'm going to duplicate this draw and put it up here. Have a new high there, right? And the market looks above that high of the range, and there's a breakout here that fails. And when that fails, because it doesn't have upside continuation, the obvious or the first destination is the opposite side of that range, which originally was this, and now is this one, 58 something, 58, let's call it 58, right there. And also, I have noticed this, right? what I did here, I have this trend line here. I just duplicate this one, put it lower. And the next thing I do is duplicate this one, put it lower, down here. Right? And guess what? I got this. We may have something here to the downside, aiming towards this thing here. This is not, and it is not coincidence, right? Okay, markets bought from that, but I know this is the after the fact, right? We never know what's going to happen. Never know what's going to happen. Let's see what the next thing is, right? What the market is aiming to the opposite side of the range, but we explained here, right? Because that's what I see happening after look above and fail. In the weekly time frame, the market is in balance, still inside the range, inside the 16-week range. All of these weeks, right? How many weeks we have here? From here to here, there are 16 weeks, and the market is inside that. The weekly trend line sits at 59.42. This one here, this is something I drew last night. Around such level, around this level, because just after I did that, I started looking into, as we will see in the next chart, we have last upside gap formed in January CPI. The next chart is this, the daily. And this is the gap, the CPI gap that we have, January CPI, which was actually was a bad number. And we have this, right? Market reject, just don't pay attention to that number. And this one too, right? And this could have been potentially, now that you see it, right? You are going to check. This is the daily. What is the daily? Monthly, weekly. Oh, I don't have a screenshot of the daily here. But I remember taking that. Did I? Nope. Well, now aiming to this gap here, that could be potentially be something where the market is what the market is trying to do. But it's a significant gap. There's something like 50 points here. Right? Next support area is around the 100 SMI at 59.78. 59.78. Where the market is right now, kind of around this 78, around this one here. Now the thing. It was very confusing yesterday because the charts have many references, I think considered relevant reference, that have been very visible. Right? The daily trend line at 59.84. $59.84. This one, I'm talking about this one. This is in the daily time frame, not the weekly, but the daily time frame. This one, this one here, look up. The 159.78, 59.78, this one here. And the gap high at 59.48, this gap, the gap high 59.48. This one here, 59.48. Downside continuation has those levels to monitor for monitoring the moment if there is, continuation. Right? After all, we have lower volume yesterday. But I did here, instead of doing the weekly, the daily, I snapped the weekly twice. And something interesting regarding the other markets, gold is making new highs. Gold making new highs is a sign of uncertainty. somebody's hedging there. They don't see these times to be the best ones. Bonds are not a factor now. I can see a trend in crude is dropping. But the most important, I think, is this one here, the dollar weakening here. If this continues going lower here, this is not good for tech. This can be a factor. Not now, but just checking, paying attention to those. Something really questionable from yesterday. The late break, the late liquidation coming exactly from Halbach. Previous period also from Halbach. All the previous to that also Halbach. Very, very, very questionable levels here, and the high from the 50s. But the corrections or the rebalancing that happen to these things not necessarily have to come the same day, not even the next day. Yeah, we know that completely. And here is when it becomes interesting. Right? Okay, yesterday is done, but it was very clear, right? We were talking yearly about these distributions here. This could be a really good area to know that the trade is good or not, but the market didn't even get to that. It rather gave us this level here. If the market takes this one, that's an out. That's an out, right there. Right there. How far it's going to extend, I have no idea. Well, and that's why there's just a little recap of yesterday's action. This is something also that I'm carrying. All of that came from the overnight that had kind of like a pretty similar thing like this, right? How many highs this high? For example, 1, 2, 3, 4, 5, 6, 7, 8 highs around the same area. The same thing happened yesterday. So we have back to back, which is not a good sign. I have to be, not that I am going to be long, but I got to be aware of that. Got to be aware of that. The next thing is the trade, actually, right? We talk about how this day here had 5 lows. This one has 5 lows. That was a constant, right? Again, 4 lows here. The market went from a distribution that didn't close to another one that didn't close, which was yesterday. Right, and guess what we have down below? We have more of this. Right, it is true that I have something here that has taken this one, but if you are placing something here, you will have your stops below this low here, and the market just didn't have acceptance below this low at the time. Could that possibly be the case today? Who knows? I don't know. I have no idea. But what I have is the market reaching the low of this range, right? Now it comes, all the things that you were writing before, monthly, weekly, daily, comes to something here. You got these lows, right? And this is zoom in. I have to zoom out here, zoom in, and have a look at what's happening in the structure of this market. Right at the low of the range. And we may have potentially in the same way as we have an upside breakout and failure, we may have the same thing here. Look below, downside continuation, failure, I have no idea. But that's something I have to check. All right? The market is below, monitor for downside continuation, or look below and fail, below the 6-day range. And this is what I consider was the highlight of my homework last night. This was based in this observation, but to get to that observation, I had to do all the steps that I did before. Right? No, it's not just the previous observation by itself, right? As I have my short-term reference in the upper side is the low of the range at 6080, 6018, right? This one here, for today. Why I call that a range is this range up here. This is one clear range, and this one is another big one here, right? Downside continuation, we'll see the market building value below that area, below this area, and moving towards, or moving away from the 6,000. I have to correct this. Edit. Moving away from the 6,000 and toward the go no-go levels. And I just got those two go no-go levels here. These ones, the ones that I have show in the monthly. Remember these ones here, and this one, the big one, the 57 something. Okay, towards those areas. Markets don't move straight up or straight down. It was just unbelievable how this come to play. Right, the market getting out of the range in the first period signals weakness. Signal weakness. There was no overwhelming inventory being short or long in the overnight. There was fairly balanced here. And taking this low, closing the distributions from this day, right? Notice that the market didn't take this one, did not come and close this up here. It's rather closing this distribution from this day and aiming to this low here, which is the gap of January CPI, gap high. And it's just, if you are short down here, you really need to focus, right? You got to do something down here. Of course, when it has happened, it's really easy to talk about trading when you have a chart that has already been printed in front of you. Trading is not like that. We don't trade like that. We have to risk something. And risking here, risking a short, what is the potential gain? What's the risk reward you have? Hey, here, you are well below value, aiming to the close of the gap, which is 15 points after the market has gained or printed how many points here? 70 points to the downside. All right. Also, we were checking this, how this market is using the instead of using the 6,000, 61 or 6,200, they're using the 60, the 30s, right? 30 here, 30 down here, you're potentially doing the same thing again, right? And highlighting these blocks here. The next block we have on the lower side is this one, which happens to be also the 5% pullback from the all-time highs. At this level, and that's why we got again monthly, weekly, and daily time frames. This is the 5% pullback. Notice where monthly wise the market is right away open, right? Weekly, as is being bought from the trend line, we have a check the low of this 5 week range, kind of like right at the center of this range, right at the center, mechanically being bought from this range. Probably this level could be a next reference in the lower side. Inventory is being liquidated here. This is a liquidation of inventory. I don't think there's more than that. We have this 5% pullback that I show you on the profile, around the 58.50, 58.60, something like that. And the go no go level, the 57, right? Just here, right? This market is not doing much really. You can see if you look just the price, you say, man, this is a big break we're having here, right? Market is going to hell now. But it's not even 5%. There's nothing. I guess we talked about this before. There's nothing here. If I check the daily, right, this is the bigger time frame, trend line. I think this one here, this is an extension. Let's check. 36. 84. No, it's not. Something that I noticed here for some, this gap here has been, it's half of the gap now. This is really, still we have a gap there, but it's not as much, it's not as big now. This contract started trading here, around this area here, from here. So notice what's happening there, right? This is the left side. This is the left side of this range. Right? This is the left side of the range, back and forth. So we check above this high. Now it's potentially aiming to this low here. I still haven't checked the low side of this one here. It have 1, 2, 3 times look below, 1, 2 times, 3 times look above, right? But this is, you can see this thing as being the left side, right, of that range. Something that I'm checking now is how big this excess here is, you know. But look below, you have in the daily time frame, really nice excess here, same thing that we have here. And what happened after that, you have huge rally, right? I don't think, I might be biased here, right? I don't think that the conditions in the market allows for something like that to happen now. Right? Because we have a lot of long inventory here. There's a lot of volume here. Right? A lot of volume here, for all this volume aiming to the long side. And there's just a couple of days that have been, there's liquidation here. All these contracts have to be executed, have to change hands, you know. If you are long, that meaning acquire just for one contract, right? 300,000 worth of stock, and there is millions, billions. No, each day this market has at least 1 billion contracts being negotiated, right? I wonder if somebody wants to execute that. But talking just like that is not always easy, because there is a lot of things that happen here, right? Those contracts, especially the years, are often used to hedge as well. Yeah, I don't know. Maybe Moses used to hedge portfolios. And what remains in the market is just trading. And since the trading has been weak, who would want to execute the contract? I don't think anybody. It doesn't come to my mind, or anybody trying to execute here. This market is not having rebalancing on inventory, which means that there's some sort of sideways trading. A big break, downside continuation here. There's still not anything here that can potentially sign that this break is over yet, right? I am saying that. Now tomorrow we have Nvidia, and at the end of the week we have PCE. Nvidia is the last tech being having earnings reported. Doesn't look that's going to be bad. Seems like actually going higher and higher. And the reaction in the market is usually positive to those things, especially Nasdaq, and especially after all this break that Nasdaq has had. Huh? Look at this. Nasdaq has reached the opposite, has extended way below this range here. Took these lows 1, 2, 3, 4 out. The same story as in ES, as the ES. Let's check the Dow. The Dow still has a ginormous gap here to fill. Same story, no excess of the highs, no excess of the highs. Also, we talked before that has a huge upside potential. Look at these ones. But, you know, it didn't do that, didn't do anything. And actually, it's way below. Look at this, way below the 200 moving average. Okay? What happened when what is expected doesn't happen? Instead of having a huge rally here, we have a huge break. How far this can extend? This is the first time I am actually doing something here. We have something like this here in this market actually, huh? A continuous look. I have so many references in the ES, but this gives you a better look. Excess, look above failure. Now it's looking below this 5-week range. You can consider this look above this 4-week range and failure. Has reached the opposite side of this range. Has reached the opposite side, look below. Now, what's the next thing? It's going to come back and check the upper side? Who knows? What happened here, right? We have this range here. Breakout range. Check back inside this. It didn't reach the opposite side. And out we go. We form another range here. It's a big one here. The daily time frame has taken the 100 moving average, has not closed the gap, and this was really interesting, right? Really nice. He hasn't touched any of the gap here. Huh. Now this is interesting. Now I'm watching this. It didn't even get to that gap, and this is a SPY. I am checking this because the market has been mostly short-term trading here. All right. So this could be relevant actually. This market may have, while the ES has a gap partially closed, the SPY hasn't even touched it. Right? Huh. Now that is something. That's what I wanted to highlight today. You know, not talk about the market, but the relevance of doing homework. Okay, we'll have a low here. Why I do this, for example? because traders love these lines. Come on, man. Look at that. Look at that. Look at that. Look at that trend, man. Look at that trend line. It's being bought from a trend line. Let's duplicate this thing. Let's duplicate this one. Does it fit the upper side? Yeah. Look at this. 1, 2, 3, 4. 1, 2, 3. This is it. Alright. Trading above. Buy for that breakout. You got another one here. But the difference thing, the thing here is now you have a range. Now we have this range, this significant range here. How many days? This is a weekly. 2, 4, 6, 16 weeks, right? 6, 11, yeah, 16-week range being this. No. This market is in balance here, believe it or not. The market is in balance. I'm going to duplicate this one here. And call it a range from here. All the way to here. First things first. So market has to deal with this range. I don't want to talk about this range, this bigger one here. For example, this 5-week range here, or the 10-week range here on the left side. If the market doesn't take this low or doesn't take this trend line and start trading below, that this is still, it makes no sense to talk about this one. Right? This is just a trend that might be starting here. And this is the daily, right? Remember, the monthly, the bigger one, is still higher. The weekly is to the downside. Of course, the daily is to the downside. Right? And trades now are selling rallies. If you check, and I took so much time to do this stream because I don't think there is nothing here now in this market, but there is something worth to consider here. We were talking about this 60-40 a couple days ago, for the years, because I remember those days when the market was trading back, using this reference a lot. I talk how the Nasdaq can be aiming to the 21,300, which actually it did, right? Once you have that tested, it checked it, you have a short here. But that was it. That was this one here. That was this one here. Based on that statement, right? You get a short here. This is the next opportunity, right? And this is the stop. This is the market gets too close or takes this one. There's a huge the odds that this market may have something to the upside increases. As long as this remains still to the downside from the short-term trade perspective, nothing else. Right? This is just short-term trade for that market. To whoever trades Nasdaq, I don't think there's, as I say, I don't think there's anything right now in this market that is worth as of 3 p.m. How much are these 6,000 calls? what? No, 25th. For example, there's some selling rallies 140. I might see something here, man. All right. Wish you guys have a wonderful rest of the day. Stay safe. Have a good weekend. Have a good rest of the week. My bad. No weekend. Have a good rest of the week. Bye bye.